Welcome everyone. Hope all is well. Another Market Blitz video. We got a lot to go over. We'll cover CAD Yen. We'll cover a lot of these other pairs we've been pounding the table on, like Pound Alls. We got big news event this week: Fed fund rate, Fed press conference, Bank of Japan rate decision, press conference. So I'll give you a few ideas on how to play these news events. Show you what's going on with CAD Yen. And we'll get into it. Risk disclaimer, read it over. And let's go. Start off here on CAD Yen. Daily chart. So, if you saw the trade of the week video I put out, I didn't put the count in there. I probably should have, but when I draw up these order blocks and stuff, right? And right now we're on the weekly chart. Now, I don't trade these order blocks, but I know a lot of traders do. I know that there's a group of traders that trade order blocks, right? After breaks of structure. So back down to the daily chart, right? You break structure right here, and then they would call this your boss, right? Now you got your boss because you broke structure. Now they pull that weekly order block, and this becomes their sell point. So there is a group of traders that trade that way. I don't draw up order blocks. I can just see them when they line up with my trades. I trade my trades. I trade patterns and EMAs. Sometimes, right, pivots are just added confluence for me, and these weekly order blocks and daily order blocks are added confluence. It just tells me that there's another group of traders there eyeing up the same spot I am. And you can see that our weekly pivots, right? This weekly order block lines up with our weekly pivots. So pivot traders will be selling this area, and weekly order block traders will be selling this area, and pattern traders are going to be selling this order. Now, we had a couple possibilities on this thing. I'll clear this off for now. We had the possibility of this being an expanded flat right here, this whole piece, and coming back up to break the highs one more time. That possibility is still there. And then now you're running up into your quarterly R2 again. All right, completing that potential A, B, C, and we're looking for that big drop down, right? At that point, you'd be looking for like your daily 200 or something. But the other count here that I think is more probable is this one right here. That this is your wave one, this is your wave two. So we have to make sense of this wave right here. We have to make sense of wave two. And can we break that down into a corrective structure? And when we drop down to the 4-hour chart and we look at that thing, and I'll take these indicators off, I'll hide them for right now, and I'll get rid of this. We can make sense of this, right? Because all this piece right here is a clear B wave, right? And this is a 3-wave structure right here, right? So you have a 3-wave structure up, you have a clear B wave with another 3-wave structure up. So all of this right here could be the running flat, all right? And when we measure running flats, we always pull the 618 is always the first stop, right? When we measure a running flat, we usually go to the 618 a wave A or to the 100 a wave A. A lot of times a running flat will stop at the 618, and this running flat stops exactly at the 618 of wave A. So we can label this an A, a B, and a C for a running flat in the middle. All right, so all of this becomes our A. We have a running flat that tags the 618 perfectly, and then we get another higher high. All right, all a C wave has to do is take out the previous high, and it's a C wave. It doesn't have to run to the 100 of wave A every time. It does not have to be as long as wave A. It just needs to break the high, and you have a C wave. All right, so this would be our C, and that is our wave 2. Now we measure wave 1 to the top of wave 2, and we can get rid of the one. I'm not expecting to stop at the 100, right? We're not stopping at the 100. We're not stopping at the 123.6. We're running down to the 1618 or the 2618, all right? So we'll put the 1618 on and the 2618. 2618 comes in at $100, and the 1618's at like 106. And when we put our indicators back on, that would just be your weekly 89 and 200. All right, so we're looking at this as a 1, a 2, getting ready to start a wave 3 down, right? A 1, 2, 3, 4, 5, 6, right? Are we going to end at the 2618 or the 1618? So these are our two targets, right? So, and then now, if we measure this thing, we have the same exact pattern on the, it's making in the lower degree right here, right? So now you got this potential running flat, right? But you got high confluence. 100% of this wave lines up with the 2618, right? For wave 3. And we'll get rid of this and we'll put the 618 on again. All right, so 618 of the larger structure lines up with your 89 and your 1618 of the 1, 2, right? 1, 2, 3 down to the 618 of wave A or the 100, 2, 6, 1, 8. These are the areas we're looking to go, and we're looking to go now. When we drop down to the 4-hour chart, we are looking at this as a wave 1, looking at a wave 2, and then now you are starting that lower degree 1, right? And then now this is a 2 up here. And you're getting ready to make a 1, 2, right? 3 down here. Whatever. 3, 4, 5. So now you're getting ready to start the 1, 2, 3, 4, 5 for that larger degree, for our larger degree wave 3 down. All right. So that is why you want sells in this. All right. That is why you want sells, because of this potential, right? You're starting 1, 2, 3, 4, 5 down to 1, 6, 1, 8. You can get extensions all the way down to the 2, 6, 1, 8, which is our weekly 89 and 200. So that is why we wanted to pepper this area with orders, and we wanted another order up here. We are not expecting, if this count is correct, this high will not get taken out. So you want an order here and you want an order here. And we know that we have a high confluence of traders here. We have pivot traders here. We have pattern traders here. We have order block traders here. All right. So any news spikes up on thin volume should run into heavy orders up here, and this should all be wick, right? It would all be wick up here, and you would have an engulfing candle to the downside, and then that kicks it off. If we close above this high, I have the count wrong. We shut the trade down. Simple as that. You're looking for a 1, 2, 3 down to your first stop, weekly 89. We got an order here, and there's another order sitting up here, right? For trying to catch news event spikes up. So that is that. When we look at pound dollars, right? What are we doing in pound dollars? We're bullish. And when we go to the daily chart, right? We can look at the same thing. We got weekly pivots on here, and we also have this daily order block right here, right? Now, I don't draw, like I said, I don't trade these order blocks. I just automatically see them when they're in an area I'm looking to buy anyway. And then it's right in between your weekly pivot support. And when we go to the weekly chart, you also have another weekly order block sitting right here. So you got a weekly order block, you got a daily order block, we got pivot traders, we got our weekly 34. All right, when we drop down to the 4-hour chart, take a shot at your 4-hour 34. All right, this is just going to be a 34. All I need is the 34. That's my trade, right? But now we got EMA traders down here. We got pivot traders. We got pattern traders. We got structure traders. All right, people that are buying this previous structure, break and retest. We got order block traders. So, right, and then you're going to have imbalanced traders as well, because they're going to be measuring this wick to this wick, and then they're going to be buying the 50% imbalance of this candle right here, right? So you got 4-hour imbalance traders, daily order block traders, weekly order block traders, pivot traders, EMA traders. The point being, all right, the point being is this. This area is a very high confluence area. And I think Pound has news tonight or tomorrow, but any spikes down into this area should get bought up immediately. And you'll just have a wick down here and you're going to make a higher high. All right, so any spike down here just turns into a higher high. All right, and there should be a lot of buying pressure right here. So our initial risk is right here. We bought these lows and we had to stop below this 4-hour swing right here. All right, so we still need to keep our risk here, but we don't want to see a daily close below this level. All right, you don't want to see a daily close below that level, but especially below this higher low. So you hold the trade, and if we get a daily close like this, there's going to be a lot of other traders that need to get out of this position as well. Pivot traders, order block traders, EMA traders, pattern traders, structure traders. All right, so if we see this, we just dump the trade and reevaluate at that point. But that's why the daily chart's good. So not a 4-hour close, a daily close. Right? Any daily close below this level, really this wick here, but really you don't want to see a daily close below this level. So we should be good. Just let it play out. And if you're looking to double up, you could stick another order here, right? Once we make this higher high, now we take our risk off the table. All right, now it's gone, because now we don't want to see a close below this high, this low, I mean. All right, we don't want to see a daily close below that low. So we're in it risk free and it's running, right? So that is that. So maybe I'll do a video on this too, like high confluence areas, but this is definitely a high confluence area down here. You got your daily 34, got your 4-hour 289. They're all trending up. You got pivots down there, order blocks down there. There's no way price should get through this. If it does, it tells you something's wrong. Get out. And not a spike down either, right? You could spike through this intraday, but then you're looking for that daily candle to close up here, and then you're looking for a giant wick down here. All right, so, and then we'll go over some of these majors, right? How to play some of these majors. And I had this marked up. I already did a video, but then the mouse died in my thing, so I had to restart it. But when we look at Euro on the daily chart, we have this level, right? When we look at the weekly chart, right, we're trending down. All right, you got your 89, your 200, your 89, right? We got lower high, lower high, lower high, lower high, lower high, lower high, and we're looking to come after these lows right here. We're just looking for this. Pretty much the same thing on Aussie, right? We're looking to put for a push down back into these lows. Now, we got Fed press conference tomorrow, so let's find some high confluence areas that are not near price now, just in case we get a spike. Just in case Fed comes out and says something dovish. He's not expecting to cut, but he has been pretty dovish. But so you're looking to catch any spikes up. And when we look for order blocks, there's a daily order block. Here's an imbalance, lines up with our pivot and this, right? So can we pepper two orders? One right here and one right here. All right, we got two orders on euro dollar. One here and one at this order block here. All right, and when we go to the weekly chart, we're below the 8, you're expecting to stay below the 8. Any spikes up, we would be thinking this is all wick, right? Any spikes up should turn into wick on the weekly chart, and we should close back below the 8 and continue trending down. So back to the daily chart. You absolutely don't want to see a close above these highs. So I think you put a couple orders at some high confluence areas trying to catch a new spike up, and you don't want to see a close above these highs. Let's go to CAD. Dollar CAD. What do we have on the daily chart? We got pivots, we got EMAs, we got order blocks, right? So we got this order block here. We got our daily 34. We got pivots. When we go to the 4-hour chart, all right, that would be our 4-hour 200 down here. And when we go back out to the right, you got previous structure right here. And when we go back out to the daily chart, we have an imbalance right here. So let's draw that in. This wick to the bottom of this wick, there's 50% of your imbalance. I wouldn't be pulling the trigger on that. That's a little too high. Remember, you're trying to catch a new spike. Now, if you wanted to stick an order here, it would have to line up with something on the 4-hour chart or 1-hour chart. All right, well, that kind of lines up with your 4-hour 34B. So if you were taking a 4-hour 34B, you also got imbalanced traders trading with you. Is it anything on the 1-hour chart? Yeah, it would be your 1-hour 200, right? So now you got that. So you would stick one here, and you would stick another order down here at your 200, and you don't want to see a daily close below this level. So you pop an order here, you pop an order here, and you don't want to close below this level. It's how you play the new spike down. So, all right, this is how I do it. So, if you're not in, or you're looking to add in, or whatever, so, and you just don't want to see a close below these lows. So that is pretty much that. So we caught you up on CAD yen, caught you up on pound Oz, pound CAD. Let's cover pound CAD because I posted that one. Yeah, pound CAD's kind of still sitting there. Daily chart. Yeah, I mean, you're going. I really wouldn't like to see it close below the 8, so I'm in this thing from this candle right here. All right, I entered. We never closed below these lows, tagged the 34, and go. So my risk is still on the table. I'm not really looking for any bearish engulfing close. I kind of just want this thing to keep trending and just run to our weekly pivot, right? Any close below the 8, bearish engulfing close, then I probably shut the trade down. All right, so just let it run for right now. There is no new entry though. So that should be that. NZD CAD coming into some nice areas. 4-hour chart. Things still got. I'd like to see a double bottom or something. This ain't a bad area on NZD CAD though. Daily. We'll see what it looks like tomorrow. Because you are coming off of your quarterly R1, so. Alright, so. Check out Aussie, right? Because Aussie's been one we've been looking at as well. When we look at Aussie, do we have any order blocks? And it's the same thing, right? So here's your setup. We're looking for Aussie to run down. The only reason I would favor Euro and CAD over Aussie is because Aussie actually has stacked bullish EMAs on the daily chart. So Aussie would have a better chance of closing above that high on a new spike just because you have bullish EMAs on the daily chart. Now, again, when we step out to the weekly chart, we're bearish. And we did close below the 8, and I'm not expecting that. We're sitting at the 8 now. Any any price that comes up past our weekly 8, I'm expecting to be all wick. So when we drop down the daily chart, we do have this order block here. We're sitting up against our weekly 8. All right, we have this small imbalance right here on the daily chart. There's 50% of our imbalance, lines up with our pivot. Order block lines up with our weekly pivots. And if you wanted to just stick a couple orders on Aussie trying to catch a new spike and you didn't want to see a close above here, I would expect these two orders to turn into wick on the weekly chart, and close. These two orders would be all wick, and you would close back below this 8 on the weekly chart. And we're looking for that move down, right? We're still looking at all of this as the expanded flat coming into your trend in 89. What would change our bias is if we got a daily close above that high, right? And that order block and stuff. So that's what would change our bias. Until then, any moves above this weekly 8 will probably be wick by the end of the week. All right. And that's how we're looking to play it. Shut the trade down if you get a daily close above this high. All right. So that's how you could pepper a couple orders in Aussie dollar. So that should be that. If you guys want me to cover anything, let me know. Leave me a message in the comment section. Other than that, have a good one. Happy trading. See you tomorrow.